Lally, thank you so much for joining the podcast. How are you?
I'm good. It's a pleasure to be here today. Happy Thursday.
Happy Thursday. Yes. We go a ways back, and we're always bumping into each other on the event circuit around the city in Toronto. You're super active. You're in market. You're doing really exciting things, and also, what you've been doing has changed over time. Yet we always manage to still mix in the same circle. So yeah, I guess when I was with Newtopia as their CFO, when we were trying to raise money, we met with you. And I was like, what's IP? What's IP financing? I didn't really think about it before then, but when you're trying to raise money, you think about every way to raise money. And then since then, you've had a very, interesting journey. And leading up to then you have as well. So maybe I'll let you kick off with a little bit about your journey.
Sure. I mean, I'm the classic operator turned investor. I used to be a senior finance professional in technology, digital media, and telecom companies. And then I made that pivot into the investment world. I would say largely because I saw the frustration of companies who were looking to raise money, couldn't really find the right, financial fit. And especially companies that tend to be very innovative and intellectual property rich. The capital markets just couldn't really understand them and couldn't truly understand how to underwrite them. And so in 2015, I remember I met a company that was still looking to start up. It's a private credit fund called Quantius. And they had an IP-backed lending thesis. Essentially, IP-rich companies outperform the market. You should be able to lend to them, give them non-dilutive capital to help them grow. And by truly understanding their intellectual property strategies and their portfolios, you're going to be able to find a lot more, credit enhancement. And therefore, these are companies that should get financing. And that investment thesis resonated with me. And therefore, I made that leap. I joined a growing, very successful company and moved over into starting a fund. So that was launched in 2016. Did a lot of lending to knowledge-based companies in Canada. And then in 2020, we were approached by the Business Development Bank of Canada saying that we really love your thesis. It resonates with the nation's IP strategy. It's a great platform to support entrepreneurs in Canada. So they asked me and my team to essentially join them and launch an IP-backed financing fund, which we did launch in about July 2020. And we were able to grow the platform, reach a lot of companies, and did real great support for IP-rich entrepreneurs in Canada. Now, what I'm doing is that I've taken all that decade of experience, and it's actually strengthened my conviction that the intersection of intellectual property and finance is only going to grow. And it's really a way of diversifying the investment community into a new asset class. And so last fall, I launched IP Investment Partners, which is an advisory to institutional investors. So sovereign wealth funds, pensions, global asset managers, foundations, to actually help them do these IP-related transactions. And on top of that, being in a position to also help these companies with IP value creation, because I think it's not just about providing financial capital, it's the intellectual capital that comes with the investment that's important. And on top of that, because the discussion about IP finance is only getting louder on a global scale. I'm also helping policymakers and governments think about promoting IP finance and developing IP ecosystems.
That is a lot and very cool. And congratulations on launching the new practice.
Mm-hmm.
And a couple of questions. I guess what I'd start with is just to break it down for folks. So, they're listening to this and they're like, we all have a sense of what IP is,
Mm-hmm.
but to make it a little bit more tangible, maybe break it down. What are some of the common industries or use cases that would be familiar to folks? And like it could be structured, I presume, as debt, maybe equity. There could be royalties, and so term loans. Like, what does this really look like for a business?
So I'll actually answer this in like three parts. There's what is IP. What is IP finance? And, what am I focusing on right now? So on the question of what is IP, I think everyone really has different definitions of IP. So fundamentally, intellectual property is defined as creations of the mind. It's what comes out of human inventorship, human innovation, and creativity. When these sort of ideas and concepts and works become registered, that's what you call IP assets, right? And so you've got patents that can be filed, trademarks that can be filed, copyright that can be instituted. And then on top of that, there are other forms of intangible assets, such as proprietary software code or large data sets that are collected. Very important are trade secrets, also brands. Like if you add those registered IP rights and those intangible assets, that's my definition of IP. IP finance then is a way in which you're making an investment, whether it be debt or equity, where you're actually valuing both the tangible and intangible assets of a company. And so very important are the fact that the company that you're funding, and it's not just companies, it could be entities, have to have an IP portfolio that has these different types of intellectual property assets. Because there's the belief that when you value those, then you get a better sense of what the company's real strengths in the market are, how it enables them to be competitive in the market, and what makes them successful or have the best cost structure, or be able to command a price premium. That intellectual property also is a key value driver for them. In a situation of an M&A transaction, an acquirer could actually put in a lot more of a multiple to enterprise value because of the presence of that IP portfolio. And in the case of a loan, then it is an asset that you could liquidate and do a recovery from, and so it can also act as collateral. Again, it's a process, and it's done different ways. I've seen IP finance done in different ways and different strategies, but fundamentally it's about valuing, well, first of all, identifying and then valuing and analyzing the IP portfolio as part of the underwriting or part of the transaction. And then the third thing here is that, what do I focus on? I'd love to be able to do any type of IP deal, but I'd say that where the markets are right now, and I would say I align myself more in like the private credit market, is that one is I think there's a lot of opportunities for growth stage and middle market companies that have these portfolios get more access to growth capital, and also licensing businesses. So companies that have IP assets where their primary revenue model is to license them out and get royalties for them. So the sectors that I'm working on right now are relatively broad. There's the traditional technology and healthcare sector where we see a lot of this, and it's a bit more automatic and tangible. But I'm also seeing a lot of IP richness in companies in advanced manufacturing, in media and entertainment, sports market. I'm seeing a lot of sort of IP richness in that. So it's actually relatively sector agnostic.
Got it. Okay. And then would you say the traditional lending, like the Schedule A banks, they don't really lend against IP, do they? I mean, where is the gap in the market that you identified? And the fact that
Mm.
you're advising institutions, is there sort of a gap in terms of recognizing the value of IP? Like, why is this not super well established?
So I think the gap exists because there is to a certain degree information asymmetry. And there actually does, there is a requirement for a lot more specialization in this field because you need to understand what the nature of the intellectual property assets a company holds. You need to understand the legal implications, the economic, I guess, business models that may not necessarily lend itself to more traditional sort of business models that you're seeing out in the field. When an IP deal comes forward, it automatically gets associated as being esoteric, and that sort of creates a barrier to entry. But I believe but I believe that I'd say those barriers should collapse over time because if you look at the makeup of the global economy, a lot more companies are generating these intangible assets. A lot more of the value of the S&P 500. I think they just Ocean Tomo just came out with a graph last week indicating that it like 92% of the S&P 500 is now driven by intangible assets. So the investment community, and that obviously includes the banking community as well, should be looking into this because it's going to be the wave of the future. And to really understand these companies, know how to nurture them, how to provide them with customized credit, I think is going to be very important because it shows an appreciation for the uniqueness of their business models. And I'm seeing different trends globally on this. I'm seeing in the case of, let's say, well, in just case of the US, I mean, a lot of it really happens at like the large scale, like the large big banks, Wall Street banks. They are doing it. But I think it's also because they do have a much larger market of very intangible rich and IP rich companies. In emerging markets, we're starting to see a lot of interest more at doing IP-backed finance in the SME level. So we're seeing that a lot in Southeast Asia, Latin America. So that's good. That's gratifying because these emerging economies now are seeing how you can leapfrog and spur growth by providing credit and facilities that actually do recognize the value of these IP portfolios.
Would you say in that SME space, Canada is lagging as in terms of adoption and embracing? And is that tied to sort of regulatory, protections around IP that are not where they need to be?
I think in the case of Canada, more can still be done. I think it's great that we do have a vibrant sort of banking system that recognizes innovation. All major banks have some form of an innovation practice. But I have to say that maybe we can go more forward in really looking at other forms of intellectual property rights to address some funding gaps that we're seeing in the market, whether it be in, let's say, healthcare and life sciences. I think there's more we could do there. More of the CapEx heavy sort of innovation sectors. And also, I'd say, I think that there's more we could do in the more sort of entertainment, media, sports type of endeavors. Again, more in the SME market.
Yeah, I guess anything that has a value, it could be like you mentioned sports. It could be an athlete can literally raise money against their name.
Their
Could
name, their
LeBron James not
brand.
issue like LeBron James bonds?
There's nothing that stops him. Nothing that stops
Okay.
him. You saw what's his name, Matthew McConaughey, just trademark that phrase. All right, all right, all right. And
Oh, did it? Okay.
and now he can. And I think like I don't know what his monetization plans are, but by registering that, then it is a sign that I'd say athletes, celebrities, they're understanding. And I think it's very positive. They're understanding the IP that they're creating, whether it be actual work that they've done or the brand in and of itself. And now, yes, they're on the way to really thinking about how these things can be monetized.
Right.
And
It's not
where
just
monetization exists, funding will follow.
exactly. Because it's not just them putting their name on something and maybe taking equity. They can sort of license out rights. They could sell rights and then license it back. I mean, there's just so many ways to think about monetization, but it's just like any other asset class. But it's just obviously got its own unique characteristics. And I guess sometimes when something is not, you can't touch or feel it, it doesn't give the average person the same sense of security, like real estate or equipment or
Exactly.
something more tangible. So, what should business owners or folks building or scaling a business? What are some of the considerations or the things that would be helpful for them to know as it relates to IP strategy?
So I always tell everyone that first of all, IP is people, right? You cannot create or have IP if you don't have people, you don't have the talent and the ability to stop that IP from leaving your company. Very sort of foundational are obviously look at employment agreements and non-disclosure agreements. It's what's in the head of your employees that you really need to understand and protect. And then that goes on to then commercial agreements, contracts, being able to have the right IP rights and not giving IP away at sort of the earliest juncture, especially and I know it's very difficult especially for startups to do this. It's like that very first sale when you're negotiating with a large, let's say a large company or a multinational, and they're trying to, take claim on a lot of the IP that you've created. It's like, oh my gosh, how do you push back on that? That's like I can feel their pain. That's we've seen that a lot, but just don't give it away. Like fight the fight if you have to, because I think that sets you up for the right foundations as to how you're managing and protecting your IP. Then it goes to as you grow, what are the products and services that you offer, and now and how you go to market, and then having the right IP strategy for that. It can go different ways, but obviously it's the options are there to file patents, to file for trademarks, to make sure your trade secrets are kept secret. Understand like what is the best thing you could do today from an IP protection perspective and what you can be doing tomorrow. Because unfortunately, I don't think companies have like large perpetual budgets. And so being smart about your IP strategy is going to be very important. IP strategy of a company is not just the domain of the technical divisions or the technical teams. Everyone should understand it and everyone should play a part in it, including CFOs. First of all, the gatekeepers of the budget, they need to understand what IP investments need to be made at the right time for the company. They're also more of an internal controls sort of team within the company. And so making sure the company has the right policies when it comes to IP protection, about data protection. a lot of those things usually happen are under the purview of a CFO, especially in smaller and medium-sized companies. And so IP awareness of the CFO and obviously all the different teams and what they can contribute towards IP management and culture, I think is very important.
Yeah, super helpful insights, and I think just sort of underappreciated a little bit. It's just sort of, the risk management, or you put it as internal controls. I mean, that hat of a CFO. I think IP strategy is just going to be like a standing line item, in the boardroom, because it just may not show up in obvious ways. And I think you made a great suggestion, even at the very start. The way you contract, you could be contracting away your IP. And I suspect the more you go down that path of just trying to build and sell and then scale, the harder it is to go back and get your house in order from an IP perspective.
Yes. I mean, obviously, like there are only 24 hours in the day. Companies have to prioritize things. I have seen IP strategies deprioritized over time. But I don't think it's an excuse. I think management at one point should understand that there's this asset base that they could create, further develop, further monetize. Like, we're not even talking about monetization yet in this podcast, but if the sooner we see these companies get that IP strategy in line with a business success that they have, then I think we're going to be creating a lot stronger companies that can really compete in the global stage. So if we can at least have these companies understand that, yes, there's value that could be created from an IP perspective, then let's look at how we can catch up. And the great thing about, I'd say, and I know you probably do a lot of work in the middle market, is that the middle market is a great market to really have those conversations, because the companies already have a certain level of business success, right? And so it's a matter of just catching up on the IP strategy. Whereas in some of the earlier stage companies, they're fighting to survive day in, day out. And so it becomes like a riskier proposition to think about allocating that next dollar, because you don't know where you're going to be allocating it to, because there's so many demands.
Yeah, the relative risk, like, are we going to survive and even be in business versus is somebody going to steal my know-how or, find out I'm stealing theirs in some way.
Yes. But, and how do I protect myself if I enter a new market, right?
Right. And not all markets are equal. And then the cost, as you mentioned, because if you said, hey, we're launching in a bunch of different geographies, and I now need to hire a lawyer to look and understand the landscape in each and the requirements and the risk, and it's not insignificant as far as the investment is concerned. But I suppose just asking these questions and understanding it is critical. And then as far as if you can go and raise money, I guess I never got the answer. Are the traditional banks lending against IP?
Oh, yes, very, very good question. I'd say I haven't really seen a lot of like true IP-backed deals. They could be maybe at larger, like for larger transactions, but definitely not in the smaller ones. And it's not the Canadian thing too. Like in the US, the regional banks aren't doing it. It's the Wall Street global national banks doing it. In the UK, they're very progressive. HSBC and NatWest are doing IP-backed lending.
Right.
And in Asia, there are banks that are doing it in Japan and Korea and China.
Okay, fair. Is at an institutional level, which is where you are focused now, I mean, those conversations aren't you explaining what IP is. That's for people like me and podcasts that want to get down to the basics. But what kind of conversations are you having with those groups at this time?
Mm-hmm. The conversations I'm having have been very interesting. I mean, a lot of the institutions that are already in my slate or my platform, I think really get it. They've either had one or a couple of IP transactions already, and what they're looking to do is actually diversifying into different kinds of IP asset classes because they've already seen the value of, let's say, being able to invest in a company with contractual cash flow streams that are being generated by IP assets, let's say, as an example, music. So they're already saying, oh my gosh, like this is such a very, I guess, long-term investment that we could make. It provides a steady income stream. It also is very global in nature. They can deploy larger checks for these transactions. So a lot of the discussions with me are, okay, let's look for the next sort of IP asset class that we should be looking into. Another conversation with some of the partners is, very, very happy to hear this, is that some of the more Canadian, like the Canadian investors that I work with are, let's see how we could contribute back to Canada. So Lally, let's just look at Canadian transactions, which is great because I think it took me, it took me a while to get, I guess, the attention of some institutions who actually are more focused on the Canadian market, but now I know they're there, and they prefer to be making investments in Canada. So that for me was very gratifying.
And back to government, are they helping make that happen and incentivizing that? Because ultimately, investments in IP here can keep innovation here, as opposed to having it, seek, sell to the U.S. or others. Is the government helping bring you into the room, for example, to help these companies or these institutions keep it in Canada?
Yep. I mean, definitely there are conversations happening, which I'm very, very happy to be part of.
Yes.
The good thing too is in the most recent budget, there was money allocated to renew a lot of the IP support that was already in existence. So that's great, right? Because I think it's very important to keep the momentum on the national IP strategy. And now that we've gone like one major cycle as far as what has been done, then I think now the conversation is, let's understand what we've achieved, knowing that the world around us has changed as well since that original national IP strategy was launched, and what should we be doing going forward? Because the world has changed. And the way we look at IP creation in Canada, maintaining IP in Canada, funding IP in Canada should change with the times as well.
What would you say is the biggest misconception out there that you hear when you talk to folks about the world of IP and IP financing?
About probably 10 years ago when I started in IP finance, when you talk about IP finance, the first thing that comes to people's mind is, oh, it's a loan-to-own scheme, right? Like an IP lender is lending a company money in hopes that they default so that they could seize the IP assets and then generate their own revenues from that. And then over time, there was a lot of growth, and still is. We're seeing a lot of growth in litigation finance, where obviously cases are being funded, or IP litigation is being funded, and we see a lot of institutional money coming into the forefront. So when I talk about IP finance, I talk more about it from the perspective of growth capital, more mainstream applications. And so there's still a lot of education that needs to happen in that regard. Companies, big and small, still need to be educated on understanding the value of their IP portfolios and being able to leverage that for financing. So the good thing is it's not just me. A lot of other institutions, like the World Intellectual Property Organization, I'm doing work with the International Trademark Association. They're now part of that global dialogue and discourse, which is great, because I'd say it's just going to be a matter of when, not if, IP finance really goes out into the mainstream and becomes something that borrowers and companies seek. And I'm already seeing a lot of that, like just in the last year. A lot of people came out to me, people I didn't know, say, I'm looking for IP finance. And whenever someone comes to me with that with that question or with that statement, like, it's music to my ears.
Yeah, because you would never have heard that, a decade ago. And
right. Yeah. Well, I remember a decade ago, people were there was this one time where I was getting ready to meet a company and they canceled at the last minute because they said, "Oh, our lawyer said we shouldn't talk to you because all you're going to do is try to own our patent portfolio." And but now people are coming, and again, it's very gratifying.
Yeah, fantastic. The valuation, is it very typical valuation like one would do for a business, or is it really highly specialized in how you value patents? I presume there's some element of future cash flows generated and discounted, like that's going to be typical, but what is it highly specialized and unique in how you value it?
Yeah, so I would say we take the fundamental valuation approaches, so whether it be cost, income, or market methods, because those are obviously the standards. But we do try to customize it for the situation. Like I'm a firm believer that when it comes to actually doing a valuation, like you actually need to start with a purpose, the situation, and the assumptions. And then from that, you tweak the way the valuation is done in order to help with the decision that needs to be made. So as an example, generically, when you're doing IP-backed lending and you're actually taking an IP portfolio as collateral, the valuation should range because, first of all, especially if you're looking at a portfolio like patents, and it's a very opaque market, like there's no exchange or listing that that you can see where and where there's no transparency and what the values are, right? At the end of the day, it's what the buyer pays for the portfolio. So when doing, let's say, a patent valuation, you have to think in terms of ranges. And when you're looking at the ranges, I'd say the lower end has to be closer to liquidation value. And obviously, then you make assumptions as to how you get to do the upper end, whether it be technology advancement or a much greater market, or a possible infringement value, or the possibility that there's actually an acquirer that's looking to buy assets or IP portfolios like yours. So again, these are all assumption-based, very technical, can be very technical in nature, and then definitely depending on the asset itself. Is it supporting a product or service, or is the asset actually generating contractual cash flow streams, like in the case of royalty streams or milestone revenues? Then it does change the way the valuation is made.
I'm sure there's a whole fun world of accounting around this stuff that we're not going to get into here, but I'm not going to get into ever anywhere.
Yes.
But there are folks that come to mind that would love to geek out on this stuff.
Yes, yeah. Well, I mean, the bottom line here is that unless you've got an M&A transaction, nothing here is reflected in the balance sheet, right?
Yeah.
And so, yes, there's a lot of discussions that are being done, even at the accounting standards board level right now, on how do you take into account the fact that the global economy is going more towards intangible assets, and accounting standards are still not recognizing a lot of those assets.
Yeah, interesting stuff. I think educating the market is, really important here, and I think folks, yeah, would just really benefit from understanding, how to think about not just the financing aspect, but just keeping, their house in order. Where is IP? Where is it not? And what steps can they take along the way, just from an awareness perspective? And I do think our CFO community can really have a huge role in bringing that to the attention of CEOs and business owners. Back to like your Matthew McConaughey example, like when he said, all right, all right, all right, he could have easily had terms in his contract that said anything he says in the script, no matter how he says it, like will always be owned by, the production company or whatever.
Mhm.
But clearly he had the ability to own that. Just on a separate note or related note, I guess, but your path to leadership, running a business, and as a woman in I'd still say male-dominated world of
Yeah.
finance. Yeah, talk a bit about your experience in
Yes.
the investing space as a female leader.
I would say in my entire career, um, it's always been, well, first of all, it's, I think, very important for me to be in the right culture. So I'm very, very particular about who I work with. And for me, it's very important to be in a supportive, engaged culture where, again, everyone's contributions are valued. And I think that really paves the path towards a lot more success for women in the workplace. In the course of my career, there have been opportunities for me to get a better job or to do something that I really wanted to do. But after either speaking with the team or not even meeting the team, I had one example where I couldn't meet the team. Like for me, it's just like, okay, that's a non-negotiable. Like I have to really be part of a team that I can see myself thriving in, where I can make a contribution, and where I can be me. Like, I want to bring my sort of authentic self too. And I've been very blessed, I would say, with a lot of female mentors and role models along the way. A lot of them I still keep in contact. I still talk to get advice or to share my successes and my losses. And so, and I think for me that's very, very important. I think the other, like, the other thing is I've learned, and I've learned especially after I had kids, is the power of just speaking up and advocating for yourself, being bold, being taking the risk. I had coffee with a friend in the industry, also another female investment manager, and who said, Lally, I think you're like one of the few people I know in investment management that takes a lot of risks from a career perspective. And I really liked hearing that, because we all need to forge our own paths. Understanding and learning about how women in investment management outside of Canada have built their firms, have built their careers, that gives me an understanding that, hey, if they can do that, I can do it too. But I do need to be able to advocate for myself and take a relatively riskier attitude for it, because the environment that we're in here in Canada is different.
Love that. Those are a ton of valuable nuggets for people, men and women, and I think just anybody in their career, but understanding how, as a woman in a space like this, those have been even more important to help you, get to where you are. So congratulations on all of the success, and thanks for sharing, those, valuable, that valuable advice. So as you're, driving or commuting or walking or, whatever you're doing, you might have some podcasts on, and I always like to ask,
Mhm.
What's on your podcast list? Any recommendations for folks?
Yes. So, so I don't have a lot of podcasts in my playlist because I'm actually a very visual person and I find it very difficult to focus on podcasts because if I see something, it sort of knocks me off. Um, but there are two that really keep me engaged. One is Howard Marks and the Memo. Um, Student of Howard Marks is, I'd say one of the best credit investors in the world. He speaks with a very simple but effective voice that makes it very easy for a listener to really understand areas or themes with respect to risk and making good decisions and applying judgment to things. And he kept me he kept me engaged throughout COVID because obviously COVID, there's not much you can do. You went on long walks, and Howard was my walking companion. Another podcast that I listen to, though I haven't listened in a while, it's because their podcasts tend to be long. And again, being a very visual person, it's so hard to keep on listening to the entire podcast in one go. Is Acquired.
Yes.
I love the fact that first of all, I love efficiency. So when you can learn about a company, learn about an industry, and in a way that's more story based or storytelling, I love that. So by listening to Acquired, I've gotten a real good understanding about how businesses have started, how they've built, the characters and the leadership behind them, and it's also in some cases history lessons. Because some of these companies have been around for more than like 100 years, like some of the companies that they feature, and therefore you're getting a good sense about global history. But those two,
Love
I'd
that.
say, keep me engaged enough so that my visual sort of
Distractions.
tendencies, yeah, don't get the better of me.
Yeah, I think I'm the same way. I do like podcasts for the fact that I don't need to be in tune with everything and listening to everything. I can get distracted and it's okay.
Mhm.
Whereas audiobooks, I would struggle more. I still, there's certain audiobooks I would still like, but I feel like I can't miss a word in a book. And then I'm always rewinding. It's like,
Yeah,
okay, literally getting distracted. Like,
yeah.
yeah, just last question we always ask is, what would you tell your younger self? What piece of advice would you give your younger self? I know you talked a lot about the things that are important to you, but I'm sure some
Mhm.
of those have evolved over time. But if you can go back, what advice would you give your younger
Uh,
Lally?
yes. Oh my gosh, I have so much to tell myself. I'd say three things. One is always be curious. I think curiosity will always take you anywhere, right? You gain knowledge, you meet more people, because curiosity isn't just about reading, it's also about talking to people, knowing their stories, traveling, and breathing and experiencing cultures. So, all about curiosity. The second thing is eat better. Always strive to eat better every day or every week, because it's something that will, like, having real good eating habits will grow on you, and it sets you up for a very healthy life going forward. Start early. I know it's very difficult in your teenage years, but if you do keep some level of healthy eating, then it'll only grow. And then the third thing is put your money in index funds. It's so hard to beat the market.
Maybe the best answer I've had to that question, Lally. That's awesome. ABC, always be curious. And then maybe you are what you eat,
You are
which
what
I
you eat.
love.
Yes,
And
yes.
then the index investing, which I'm a fan of as well. I guess that's like the whole Warren Buffett thing, and um, but maybe not as fun for people, but definitely, definitely a smart path. Love that. Love that. Anything else you want to share? Anything else that we didn't cover that you really want to impart on the audience?
IP is everywhere. If your company or the company you work for is not in technology or healthcare, that doesn't mean you cannot be an IP-rich company. And then the second, which I really try to grill, is IP is people. If you take care of your people, develop the talent, help educate the talent, give them the opportunities to be more knowledgeable and aware about IP, then more IP will definitely be created.
Lally, really, really appreciate you doing this, and hope you'll do it again sometime. And I look forward to continuing to see you out there doing great things. So thank you.
And you as well. Like, I always look forward to bumping into you at an event and seeing the great work that you and your team and your firm are doing to help these companies grow.
Thanks, Lally. Appreciate it.